Right, let's jump into this deep dive and see what we can uncover.
Hmm.
We're taking a look at the SAMCO Large Cap Fund today. And it seems like, this presentation really wants to speak to folks who maybe you're getting a little nervous about all the hype around small and mid-cap stocks.
Yeah, you can definitely see that in the way they've framed this.
Yeah, definitely.
There's been a lot of excitement, obviously, especially after the pandemic, about these huge returns people have seen in those segments of the market. I mean, just look at the numbers. The Nifty Small Cap 250 had returns of like 273% compared to the Nifty 50 at 92%. I mean, that's a huge difference.
Oh, yeah, absolutely. I mean, it's eye-catching for sure. But the presentation is quick to point out that those kinds of returns can sometimes come with a price.
Right.
They're saying all this growth has kind of pushed valuations in those areas, above their 5-year averages.
Yeah.
And that a lot of this is being driven by like a flood of new investors who are maybe, I don't know, not as familiar with how things can shift.
Right. And it's true, the number of demat accounts in India has exploded in the last few years, like a quadrupled in just 5 years. So you've got this wave of new investors, and a lot of them are putting their money into, you guessed it, small and mid-cap funds.
So that's kind of adding fuel to that fire, isn't it?
Yeah, it's definitely a factor.
And I guess that's kind of the point they're trying to make in the presentation. Like, hey, if you're thinking long term, you got to be aware of the risks that come with those super high valuations. And that's where they bring in their large cap fund. They're saying large caps are, kind of set up for a comeback.
Right, and large caps have this reputation for being a little more steady, especially when the economy hits a rough patch. They tend to hold up better.
Yeah, that makes sense. I mean, I guess if you're looking for less risk in your portfolio, large caps could be a good way to balance things out.
They actually bring up some data from the global financial crisis to illustrate this point.
Oh, yeah.
During that downturn, the large cap index didn't drop nearly as much as mid caps or small caps did.
So it's like they're positioning this fund as a safe harbor when things get stormy. I like that.
It's a good analogy.
But what I find really interesting is how they're going about picking their stocks. They're using this thing called, momentum investing.
Right.
Which is a little different from what a lot of people focus on, like how big a company is or how much profit they're making.
Mm-hmm.
This is more about looking at trends.
Yeah, you could almost think of it like trying to catch a wave. You're looking for stocks that are on an upswing, and you're trying to ride that wave before it breaks.
Okay, so you're trying to time it just right.
Exactly.
Sound it.
And what SAMCO does with their large cap fund is they take this idea even further. They don't just look at the price momentum. They look at the momentum of a company's revenue and earnings, too.
So it's not just about whether the stock price is going up. It's about whether the company's business is actually growing.
That's right.
So they're really trying to find companies that are, firing on all cylinders.
Yeah.
They call this the C.A.R.E. momentum strategy. I got to admit, I'm a sucker for a good acronym.
And it stands for cross-sectional absolute revenue and earnings momentum.
So they're looking at how a stock is doing compared to others in its sector, and also its own individual trend, and then how its revenue and earnings are growing.
It's a pretty comprehensive approach.
It is. And then there's this other thing that I found kind of intriguing in the presentation. They talk about their model portfolio, the group of stocks they're focusing on. And it turns out there's not a lot of overlap with the benchmark Nifty 100 index.
Oh, that's interesting.
Makes you wonder if they're trying to be a little more outside the box with their picks.
It definitely suggests they're not just blindly following the market.
Yeah, they're definitely doing their own thing. And then there's this whole concept of information diffusion, which I thought was fascinating.
Yeah.
It's basically about how information about a company spreads and how that affects the stock price.
It's actually a key idea behind momentum investing. Think of it like ripples in a pond. First, the insiders know what's going on. Then the information spreads to like the savvy investors. Then larger institutions catch on. And finally, it reaches the general public.
Oh, so momentum investing is like trying to get in early on that wave of information.
Right before it reaches the masses.
So they're trying to anticipate the market's next move.
Exactly.
And that's where their C.A.R.E. system comes in.
It helps them identify companies that are benefiting from positive information flow before it becomes widely known.
So they're kind of like peeking into the future. Very cool.
Yeah, it's a pretty sophisticated approach.
And all of this is designed to manage risk, which is obviously a big concern for any investor.
Right.
They even talk about using hedging techniques like a safety net to soften those inevitable market dips.
It's like they're saying we're going for strong returns, but we're also being smart about protecting your investment.
I like that approach.
Yeah, it's a good balance.
They even included a graph that shows how their model portfolio performed compared to the Nifty 100 TRI.
And you can see that their portfolio had a much smaller drop during those stressful periods.
Okay, so they're trying to give you the best of both worlds, high returns with less risk.
Exactly.
Sounds good to me.
And they have a team managing this fund who they say have a deep understanding of data-driven investing and Indian companies.
That's always reassuring to hear.
Right. Experience and expertise always matter.
Okay, so this is all great information, but the big question is this the right investment for you? To figure that out, I think we need to dive a little deeper into the specifics of their strategy and how it plays out in the current market.
Sounds good to me.
All right, let's do it.
Yeah, it really makes you think, with all the excitement about small and mid caps versus the potential of large caps.
Right, and that's where this whole momentum thing gets really interesting. Like, they're not just looking at size or price to earnings ratios. They're trying to find companies that are already on the move, building momentum.
Yeah, it's all about capturing that upward energy before it peaks. And what I think is unique about Samco's approach is that they're digging deeper than just price momentum. They're also looking at the momentum of the company's revenue and earnings.
It's like they want to see real sustainable growth, not just a temporary bump in the stock price.
Exactly.
And that C.A.R.E. system they talk about, that seems to be a big part of how they do that.
Oh, absolutely. It helps them filter out those companies that might just be having a fleeting moment in the sun and focus on the ones that have solid fundamentals. Like we were talking about with that information diffusion theory.
Right. So it's like they're getting a sneak peek at the future by analyzing the present, which could be really valuable in this market. I mean, it feels like things are changing so fast.
Yeah, trying to predict the market's next move is never easy. But their system seems designed to do just that.
And they're not just ignoring risk either. They made a big point about their hedging strategy.
Yeah, that was interesting.
They even showed how their model portfolio did during those really volatile periods.
And it definitely held up better than the benchmark.
Like they're trying to give you a smoother ride.
Which a lot of investors are looking for, I think.
For sure. One thing that really caught my eye in the presentation was that chart that showed the percentage of time that different large cap stocks were in momentum. It really made me think about how even the biggest, most successful companies don't stay on top forever.
Right. It highlighted how companies like Reliance Industries weren't always in momentum. In fact, they were only in momentum for about a quarter of the period they analyzed.
Exactly. Which kind of underlines the importance of active management.
Yeah.
If you just bought and held a stock like Reliance, you might miss out on gains from other stocks that are, doing better at that moment.
And that's where a strategy like the one Samco's using could be really advantageous.
Right. They're actively looking for those stocks that are on an upswing and then moving on when the momentum shifts.
It's like they're constantly adjusting their sails to catch the wind.
I like that analogy. Okay, so to recap, we've got a fund that's focused on large cap stocks. But they're using this unique momentum-based strategy to try and outperform the market. And they're big on risk management. Plus, they've got a team with a pretty solid track record.
We've covered a lot of ground.
We have.
But there are still some details we haven't touched on, like the specifics of their asset allocation strategy and how they put that C.A.R.E. momentum system into practice.
Okay, so before we jump into all that, what are some key takeaways that our listeners should keep in mind so far?
Well, I think one of the big ones is that the market is always changing. What worked yesterday might not work tomorrow, so you need to be flexible and adaptable.
Like a good sailor, always adjusting to the wind and currents.
Exactly. And it's also important to make sure your investments match your personal goals and risk tolerance. What's right for one person might not be right for another.
Right. It's all about finding that balance between risk and reward that you're comfortable with.
And lastly, I think this presentation really highlights how there are always new investment strategies emerging. It's good to explore those options and see if they make sense for you.
Right. Don't be afraid to think outside the box.
Right.
Especially if it aligns with your investment philosophy.
So with those takeaways in mind, let's take a closer look at their asset allocation strategy.
Sounds good. The presentation mentions that they mainly invest in large cap companies, which we've already talked about. But they also give a specific range for their investments. They can invest a minimum of 80% and a maximum of 100% of the fund's assets into equity and equity-related instruments of large-cap companies.
So they're really committed to large caps as the core of their strategy.
But they also have some flexibility. They can allocate up to 20% to other companies.
So they're not completely limited.
And they also mention using derivatives.
But they make it clear that it's only for hedging purposes, to manage risk.
So it's like a backup plan.
Exactly.
I like that. And they're very transparent about their ability to adjust their net equity exposure based on their momentum outlook.
Right, so if they see signs of a downturn, they can reduce their exposure.
Even down to zero.
Exactly.
Wow, that's pretty interesting.
Yeah, they're not afraid to take their chips off the table if they think the game is about to turn against them.
Smart.
And on the flip side, when they see strong momentum, they can increase their equity exposure up to 100%.
So they're not just passively riding the market. They're actively adjusting their exposure based on what they're seeing.
Yeah, very dynamic.
Okay, so let's dive into the heart of their strategy, the C.A.R.E. momentum system. Let's start with cross-sectional momentum. What exactly does that mean?
Well, it's about identifying those large cap stocks that are outperforming their peers in their sector, and also the broader market.
So they're looking for the leaders,
Exactly.
the ones that are setting the pace.
Right.
And that fits perfectly with the whole momentum investing idea.
It does.
Okay, so then what about absolute momentum? How's that different?
So cross-sectional momentum is all about relative performance. But absolute momentum looks at the overall trend of the market and individual stocks, regardless of how they're doing compared to others.
Okay, so it's more about the big picture.
Right, like the direction of the tide.
So even if a stock is doing better than its peers, if the overall market is going down, they might not consider it in momentum.
Exactly. And that's where their tactical measures come in, like derivatives and hedging.
To protect the portfolio.
Right.
Okay, that makes sense.
So then we have revenue momentum. This is where they start looking at the fundamentals of the business.
So it's not just about the stock price anymore. It's about how the company's actually doing.
Right. Are they growing their sales?
So it's like looking under the hood of the car. You want to make sure the engine is running smoothly.
I like that analogy.
Okay, and then the last piece of the puzzle is earnings momentum.
Right. So this takes the revenue growth analysis a step further and looks at profitability.
So are they actually making money from all those sales?
Exactly.
So it's like making sure the car is using fuel efficiently.
Another great analogy.
So by combining all four of these components, they're trying to build a portfolio of companies that are showing strong momentum, both in the market and in their business.
And remember, their model portfolio doesn't have a lot of overlap with the Nifty 100 index.
Right. They mentioned that only 2 of their top 10 stocks were also the top 10 of the Nifty 100.
Which means they're not afraid to go their own way.
They're definitely not just following the crowd.
And that active management approach could lead to higher returns. But it also means there's potential for higher volatility.
Right. Higher risk, higher reward.
Exactly.
So it's all about finding that balance.
And making sure you understand your own risk tolerance.
All right. So I think we did a pretty good job of breaking down this fund.
I think so.
We've talked about momentum investing. We've looked at SAMCO's strategy. And we've even touched on some key market trends.
But before we wrap things up, there's one more thing I want to mention.
Okay, what's that?
We've talked about all the potential benefits of momentum investing. But it's important to acknowledge the potential downsides, too.
Right. There are always 2 sides to the coin.
Exactly. Momentum investing can be very rewarding, but it can also be risky.
So what are some of the risks that investors should be aware of?
Well, one of the biggest is the potential for sudden reversals. Momentum stocks can go up quickly, but they can also come down just as fast.
So you got to have a strong stomach.
Yeah, it's definitely not for the faint of heart.
And that's where SAMCO's hedging strategy comes in.
It's one way to try and mitigate the risk.
But even with hedging, there's no guarantee you can avoid losses completely.
That's true. And another thing to keep in mind is that momentum investing requires a long-term outlook. Like we talked about, even the best companies don't stay in momentum forever.
Right, there will be ups and downs.
So you need to be patient and disciplined. Don't panic and sell when the market gets choppy.
It's not a get-rich-quick scheme.
Definitely not.
And it also requires active management.
Which comes at a cost.
Right? Actively managed funds usually have higher fees than index funds.
So you need to weigh the potential benefits against the cost.
And make sure it makes sense for you.
And even within a momentum-based strategy, it's a good idea to diversify.
Right. Don't put all your eggs in one basket.
Exactly.
Okay, so we've covered a lot of ground today. We've explored momentum investing. We've looked at SAMCO's approach. And we've talked about some of the risks and rewards.
It's a lot to consider.
It is. But ultimately, the best investment decisions are the ones that are informed and aligned with your own goals and risk tolerance.
Absolutely.
So to our listener, we encourage you to do your research, ask questions, and trust your gut.
And remember, we're always here to help you navigate the financial world.
All right, so let's move on to the final part of our deep dive. We'll share some additional insights from the presentation and offer some final thoughts for you to consider. All right, so we've talked about the good and the bad of momentum investing and really dug into how SAMCO's doing things with this large cap fund. But there are a few more things in this presentation that I think are worth highlighting. Like, they talk quite a bit about drawdowns, how much a portfolio can lose during a downturn. And they really stress how their strategy, especially the hedging part, is designed to limit those losses.
Yeah, they're trying to address that fear that a lot of investors have right now, especially with all the volatility we've been seeing.
Right, exactly. And they even show a graph comparing their model portfolio to the Nifty 100 TRI. And you can see a pretty big difference, especially during those like really stressful periods. Their portfolio seems to hold up a lot better.
Yeah, it's like they're building in shock absorbers
Yeah.
to smooth out the ride,
Which could be really appealing to some investors.
especially those who aren't comfortable with those big swings.
Right. So it all sounds pretty good on paper. But as we've said before, there are no guarantees in the stock market. So I think it's important to step back and ask yourself some key questions before jumping in.
I agree.
Like, first and foremost, does this strategy fit with your investment goals and your risk tolerance?
Right. That's the most important thing.
We've talked about the potential for higher returns with momentum investing. But there's also the potential for more volatility.
Exactly.
So you got to be honest with yourself about how much risk you can handle.
And how comfortable you are with the ups and downs.
Right, because if you're going to be checking your portfolio every day and freaking out when it drops a few percentage points, this might not be the right strategy for you.
Definitely not. Momentum investing, even with a focus on large caps and hedging, it's still going to have some bumps along the way.
Right, it's more of a long-term approach.
Mm-hmm.
Another big question to ask is, do you believe in the fund managers?
Yeah. Do you trust their expertise?
They've presented a lot of data and analysis to support their approach, but at the end of the day, it's the people behind the strategy that really matter.
It's about whether you believe they can actually execute it effectively.
Right. And of course, there's the question of fees. Actively managed funds like this one, they tend to have higher expense ratios than index funds.
That's true.
So you got to weigh the potential benefits against the cost.
Make sure it makes sense for you financially.
And lastly, I think it's worth considering the current market environment.
Yeah, that's a good point.
This presentation seems to be aimed at investors who are maybe a little nervous about all the hype around small and mid caps.
Right. Are you worried about those high valuations?
Do you think large caps are due for a comeback?
It's all about where you see the best opportunities in the market.
All right, so I think we've covered just about everything. We've looked at market trends, we've explored momentum investing, and we've really dug into the SAMCO Large Cap Fund.
I think we've given our listener a lot to think about.
I hope so. The bottom line is this. The best investment decisions are the ones that are informed and aligned with your own personal goals and risk tolerance.
So do your research, ask questions, and most importantly, trust your gut.
And remember, we're always here to help you navigate the financial world. That's it for this deep dive. Thanks for joining us.
Thanks for having me.